And welcome back, folks, to Broader Financial Future. In today's video, I'm going to talk about one of my favorite REIT companies. So let's jump into today's video, and that is Medical Property Trust, ticker MPW. This has been one of my favorite REITs, but the market keeps beating it up. I wanted to take a look at it using my kind of 10-step process to kind of evaluate my dividend stocks before I decide to buy it. This is just one of the things I look at. You can use your own tools or your own way to evaluate stuff, but this is how I do it here um, to give me a consideration of what I should do. But before we jump into that, what is Medical Property Trust? It is a self advised real estate investment trust formed in 2003 to acquire and develop net lease hospital facilities. And now I love this space because unfortunately, most likely everybody's going to get sick and everybody's going to be in a hospital either for themselves or actually everybody's going to end up at a hospital at some point in their lives, either when they're born, in between, visit a family member, or when they die. So at some point, we all touch the hospital, and that's the reason why I love this space so much. The company has grown to become one of the world's largest owners of hospitals with 431 facilities and roughly 43,000 licensed beds in 9 countries and across 4 continents on a pro forma basis. Now, the first thing we're going to look at is the credit rating. The credit rating is a bit old, but this is the newest one I can find, BA1. So that has remained the same. Next is the dividend yield. Now, the dividend yield, I love 3% or higher. In this particular case, the dividend yield is 8.47, which is an increase from my last video when it was a 8% yield. And one of the reasons why this dividend yield is increasing is because the price of the stock just keeps on going lower and lower, which I hate to see, but it does provide buying opportunities. And that's the reason why I was like, wait a minute, this is getting so low again that I have to kind of look more into it to see what's really going on. But the market is really taking a dip as well. When you're looking at the dividend payout ratio for the trailing 12 months, is about 57%. So I like it under 60. So it's doing really good here, especially for a REIT. This is incredible. Next up, the 3 years dividend growth rate is about 3.8%. They have a return on equity of about 14.05%, which is an increase from my last video of 13.2%. So things are starting to look a lot better for medical property trusts when you look at these particular numbers, not so much the stock price. In addition to that, I like to buy a stock at a 10% discount or more from the 52-week high. In this case, when you look at the 52-week high, it was $24.13. Currently, it's trading at some of the lowest figures in a very long time at $13.51, which is about a 44% decrease. So this stock continues to get hammered by the market. In my last video, it's still at the same 52-week high, but they only had a decrease of 40%. So it is dropping, continuing to drop, unfortunately. It's getting battered and beat. But for me, I'm trying to look at it as a positive because it gives me a chance to add more. So looking at these numbers, I'm not too worried about it. Now let's look at the 5-year chart. I think this is one of my most important charts I like to look at. Two things I like to look at is the 2000 mark. How did it do when everything crashed? In addition to that, is the stock up over the past 5 years? It is barely up from 2018, just by a few cents, but it's still in the green. So if you bought this stock 5 years ago, you would still be in the green. Unfortunately, you would have bought it a couple of months ago, you'd probably be down a lot. So it is something I like to look at. So I do see some opportunities with this stock as well. Overall, I really, really like this stock. I'm definitely totally biased when it comes to this stock. So use my opinion as a grain of salt. Um, when you look at this particular REIT, like when you go on the site, one of the things that it highlights is that when you look at this REIT compared to its peers, their dividends basically decrease, while MPW actually increased during the whole COVID situation because a lot of companies did reduce their dividend and they haven't went back up. At least with MPW, it has remained consistent. And actually, the stock price was doing really well until recently. We're just been getting hammered lately. Uh, so yeah, so this is any investment do involve risk. So you always got to make sure that you do your own homework, um, especially now the market is very volatile and we're in a bear market, not necessarily a bull market right now. But I continue to be bullish on the stock. I feel like for me, as a company, I'm going to continue to invest in. I'm going to invest. I don't know how much more money I'm going to put into the stock because I'm already on a lot of MPW. I don't want to be too heavily invested in one particular company because it could definitely weigh down your whole portfolio um, when it comes to individual stocks. Now, I do invest in ETFs and index funds as well. Check out some of my other videos in that. But I love dividend stocks, and this is definitely one of the stocks I definitely enjoy as well. Um, but like I said, everything has risks. So it's your money, your responsibility. You want to make sure you're putting your money in something that you believe in. That way, if it goes down, you can buy more, or you're not going to be so tempted to sell unless something crazy happened with the stock and it's time to get out. But that's pretty much all I got for now. Make sure to like, comment, and subscribe. If you watched this far, check out some of our other dividend videos, some of my ETFs, and all that good stuff. That's pretty much all I got to say, folks. Have a good one. Peace.